Welcome to the Capital Compass. I'm Lindsay Melchuk. Akita Drilling has a high-performance drilling rig fleet headquartered in Calgary, Alberta, with operations in Western Canada and in the Permian Basin. Here to talk about the company's prospects of 2025, their cross-border drilling operations, and so much more is CEO Colin Dees and CFO Darcy Reynolds. Hello to you both. It's great to have you back at Stockhouse.
Yeah, thanks, Lindsay. We're glad to be here.
Now, we'll start off around Akita's general strategy and outlook, which for our investors, the new ones in our audience, actually, this would be particularly helpful. Colin, as we head into the second month of 2025, what is the outlook for the balance of the quarter and the rest of the year?
Yeah, thanks, Lindsay. Our activity levels right now are very strong in both our divisions. We're currently running 12 of 14 rigs in the U.S. and have 14 of 17 rigs active in Canada. We expect strong activity to remain for the balance of the quarter. Having said that, we will be affected by seasonal breakup in Canada, so I'm hoping for the cold month of March. And then looking beyond the year, for the rest of the year, we expect to have a much stronger first half of the year than we did the year prior. And right now, things look optimistic for the back end of the year as well.
And so what about the operations and market position? Akita has achieved above industry average utilization in both Canada and the U.S. since mid-2024. Do you expect this trend to continue?
Yeah, that's correct, Lindsay. Currently, we do expect this trend to continue, and currently we're running 82% utilization in Canada, and that compares to 70% for industry. And in the U.S., that delta is even more pronounced, with Akita running at 86% utilization compared to industry at just 39%. So one of our aims was to maximize our activity in both divisions. And the first time we achieved this objective was late in the third quarter of 2024. So our objective now is to maintain that strong utilization, and that's what we're committed to doing. We need to continue to execute for our customers. And one advantage we have now is in the U.S., it's much easier to market a hot rig with strong customer references for new work rather than compete against our competitors trying to start up a cold rig with new crews. So I feel we're well positioned now in the U.S. market to continue building off our momentum.
Yeah, that's a fair statement for sure. Darcy, let's bring it over to you and chat about the demand and acreage challenges. With the U.S. rig count continuing to fall, how is Akita approaching this challenging market? I mean, are there technologies or other operational strategies to compete in this challenge market?
Thanks, Lindsay. As Colin mentioned, we're currently running 12 of 14 rigs in the U.S. This is significantly above the U.S. industry average right now. And how is Akita doing this? Well, we feel that it's really down to our focus on operational excellence and customer service. We go and be above and beyond for our customers, always ensuring that they're satisfied with the product we're giving them. And really how we do this is our size. We're small enough that we can give everyone attention to detail. The whole team's involved every day, including Colin and myself. But we're also large enough that we've got systems in place to work for the most discerning customers, from the largest to the smallest. So it's really about our size and our attention to detail.
What about the company's financial health and debt reduction? Darcy, Akita's Q3 results highlighted a positive net income of $1.1 million. So how is the company planning to approach debt reduction throughout 2025? And really, how does this fit into your broader financial strategy for sustainable growth?
Well, debt repayment has been our focus for the last 2 years, with $20 million debt repayment targets for 2023 and 2024. We feel that debt repayment and a strong balance sheet is critical in this industry, given that activity can drop very quickly, and you need that financial strength behind you to weather those kind of storms. For the last 2 years, with our focus on debt repayment, we've taken the focus off of growth and on repairing the balance sheet and strengthening the balance sheet. And I think we're in a position now where we can focus on debt repayment, but also focus on growth as well. So 2025, we'll be looking for growth opportunities. We have nothing to share on that front yet, but we're excited for what things to come.
That's good news to hear. I want to touch a bit on thought leadership and market trends. Colin, Akita has been proactive in responding to changing market conditions, as seen in your May Capital Compass here at Stockhouse. So, what trends or challenges do you foresee shaping the future of drilling, and how is Akita positioned to lead in these areas?
Yes, Lindsay. There's a few trends that we're closely monitoring right now. I guess the most imminent is the potential trade tariffs that could be imposed on Canadian oil. So that's something that we're monitoring closely. On the optimistic side, sort of counter that potential threat is optimism that goes along with the first phase of LNG Canada coming online. That in total, it's about 10% lift on natural gas demand in Canada once that comes online. So we're excited about that, and we're involved in drilling for that LNG project. And the other thing I guess we're sort of watching for is potential natural gas price recovery. And if that does happen, particularly in the US, it'll be a big boon to both activity and day rates. So those are the three trends that are sort of on our radar right now.
So let's give the audience a closing perspective on this. Colin, looking ahead, what key milestones or achievements should investors and stakeholders expect from Akita in 25? And, Darcy, how will you measure success across your operations and financial performance? Colin, maybe you can lead this one off.
Yeah, sure. I think it's simple for us, Lindsay. Our main objective is to maintain strong activity on both sides of the border for 2025. Right now, the Canadian drilling market is fairly strong, and so is our Canadian activity. In the U.S., it's a little bit different. The U.S. market is a fair bit weaker than it was a year prior. There's about 75 less rigs working today than there was a year ago. Having said that, our rig is all nearly fully optimized. So our objective is to stay very active in both basins and protect our margins. So that's definitely our objective for 2025.
And Darcy, over to you.
I think we'd measure success for 2025 just as if we can keep the momentum going from 2024 into 2025, keep the rigs active, we'll have a very successful year and pay back some more debt, and then we'll have be in a very strong position to see what's next for Akita.
Well, I'm excited to see what's next and what's coming down the funnel for all of you. So please be sure to come back. We are out of time. However, this conversation was packed with so much already for investors. So thank you both for joining me today.
Yeah, thanks for speaking with us, Lindsay.
Thank you, Lindsay.
Again, that was CEO Colin Dees and CFO Darcy Reynolds of Akita Drilling. You can find Akita Drilling Limited on the Toronto Stock Exchange under the ticker symbol AKT.A, or head to their website at akitadrilling.com for more information. I'm Lindsay Melcha from Stockhouse Publishing. We will see you next time.